There we go. Well, that's quiet morning so far. Movement. Pressing something. Spectre launches into European trucking market with planned distribution agreement. Hey Ricky, how you doing? Morning, Tom. Good man. Look with the live account. Will you be fine? There's the base hit. Good stuff, Aviator, for good stuff, Phoenix. Hey, Daryl. That's 500. Nice 500 trade. It's over the $250 out. Hey Lewis, finally it's Thursday. Friday Junior, I think. We're okay. Well, we've had a good week so far, good start to the year. You just remember it's a long weekend this weekend, guys. MLK Day. So, yeah. Next week's only it's a short week. It's a 4-day week next week. Oh, look. What are my thoughts with CPI? Well, we'll see in 25 minutes. A good CPI day could see us having hitting all-time highs on the market. So it's bullish sentiment with the inflation, and we could get all-time highs. Very close. $1, $1, Base hits. Time of day, base hit. We'll get the home runs after the. But the CPI numbers will drop in about just under 25 minutes, bottom of the hour. It will also come with the jobless claims. So you've got the unemployment data and CPI data dropping at the bottom of this hour. That should introduce a little bit of volatility onto the market. One way or the other, if it's bullish, we could see all-time highs today. A little over $1.50 will see us at all-time highs. Well, that's our first 1,000 of the day wrapped up. Hey Matteo, how you doing, buddy? First candle breaks a low. That's the time to either take profit or exit and wait for the next. Wait for this to pull back. If it pulls back to 330, we can look for a bounce. Guys, guys, $4 now. Break of $4. For a high of day. A new high of day now. $4. $4. New high of day. That is the high of day, so. Cheers, Matteo. You too. We're right back at you. Don't mind this catalyst either. Top gapper. Top mover on the day. Sector holdings. I've not had any issues yet there, Maverick. Which instance of CMEG are you with? Are you CMEG UK, CMEG Trinidad? And which one? Wow, what's wrong with the camera there, Jason? Fix my camera. Fix your eyes. There's nothing wrong with my camera. I've not had any issues. That's who I'm with. Camera's blurry. Okay. Not on my side, it's not. Must be you. Anybody else having issues with the camera? Here's Ed. Also. Sector Holdings, European distribution. Catalyst. Move from 3 all the way up dollars. It signed a distribution agreement with MLab and Moscow to bring Earth core emission systems to Europe. Already good relative, good strong relative volume already. There's 15 million shares outstanding. Good. Well, you're not helping, are you, Jace? What are you helping? There's nothing wrong with the camera. It's on your side. Nobody else is having issues. What are you even bothered about the camera for anyway? I mean, it's not like you want to see my ugly face anyway. Yeah, well, if you don't want it blurry, go and watch it on YouTube or Twitch. It's much better. I can only control what I put out. I can't control what you're receiving. Sorry. Yeah, I'm looking at it right now on the preview, so I can't control what you're getting. What do I think about Bitcoin ETFs, Multicora? I'll believe it when I see it. That's what I think about Bitcoin ETFs. Been getting this for the last 18 months now. Bitcoin ETF, BlackRock ETF this, Bitcoin ETF that, and when it finally gets approved, I'm fed up of it. Quite frankly, there's so much FUD and you know BS. When it finally gets approved, fine. But other than that, if you want to trade Bitcoin, you trade stock that are related to Bitcoin. Riot, Mara. BTM, BTBT, any of these kind of stocks will move with Bitcoin, but crypto mining stocks get the same exposure as you would with an ETF, but here you go. Just my opinion, not financial advice. Oh well, there you go. Watch for the manipulation. Watch for the dump. That's shows me not up to date with the news. Hey, Super Chip. Yeah, spot ETFs were approved. Just. Well, watch for the manipulation. Watch for Bitcoin to take a dump. You'll see all of these. The big boys will want a better price. So you'll get a little bit of a liquidity grab, a bit of a dump, and then it will really motor. You'll get quite a few people going long on it, then it'll dump, it'll liquidate those positions, and people will, the big boys, the institutional investors will get in below 30. So I'll watch for it to get below 30 again. That's just me. Well, I don't know about Bitcoin ETF dump. I think that right now is a good time to be shorting altcoins as people move their money from altcoins into Bitcoin now, or into the, you know. But personally, I wouldn't get too excited about it until I see some performance with it. All just pure speculation right now. Get the break out. There's 88. That's looking for long-term investments on a Bitcoin ETF. I'm going to judge it until it's been performing for a while. Over four. Ah. $4. Just buy Mara. Yeah, absolutely. Marathon Digital, platforms, anything like that. BTBT. Oh. Well, I think that's a big part of it, Super Chip. There is pension fund and pot managers and fund managers want it? Do they want to invest in that level? Or is it just for the retail trader? We'll see. A lot of these fund managers are still scared of crypto, and rightly so. Still considered a riskier asset, so you wouldn't want your pension locked in with crypto when you get the things to it. But who am I to say? I'm just a fat guy on the internet. What do I know? So we made our first 1,500 bucks. Nice start. First indicators. 5-minute devil horns. Doji. 4. Stick to Walmart. Well, Nvidia. That's where I'm sticking to. All-time highs earlier on Nvidia. All-time highs today. 551.65. The all-time high on Nvidia. I'd love to see it. Gotta be honest. I didn't think it would be up at 550s so soon. Well, not about close, just a reversal. Pull back, maybe to the VWAP. Like I said, if you're observing, you see the indicators, see the reversal indicators before it happens, and that's the time to take profits or get out. I mean, I was wrong to get in here for the break of $4. I should have been a bit more mindful for the $4 resistance and rejection. But I was happy enough with the movement that it would pull back, maybe to the VWAP and then move back up and break highs. I knew that, well, I didn't know, but I was confident that that was going to happen, and it's exactly what did happen. So happy enough with that. But once it started stalling up there at kind of 408, that was the time to the doji there's at P1. You've got the 5-minute devil horns. Got the little doji there, another reversal indicator. So it's pulling back. It's below the 9, all the way down to the VWAP here. So the low of this candle is 365. The VWAP currently is at 362. So we'll wait. What would you say my annual return is? What do you mean by that, Super Chip? I'm making 7 figures net. Last year, just over 1.2. Year before, just over 1 million. So, morning, Lisa. We missed you yesterday. Let's get that like count up, guys. Not hit the thumbs up button. Let's smash that thumbs up button. If you're watching on TikTok, give your phone screen or tablet screen a bit, give it a little bit of a finger drum solo. Let's get the like count up, and I will give the dog a treat. Get the like count up. I can give the dog a little treat there, which is Nutri Chunks beef sticks for the dog. She's still limping. Hey Brandon, feeling much better today. So much so I went out and got a haircut. Looking all fly, fresh. Amazing what a haircut does for you. Bit of a move, popping up, huge, but this is Spectre Holdings, signed a distribution agreement for the whole of Europe, so that's why this popped up move. We managed to get pretty much the whole move, given that we got in there at for the break of $3. 301 was our first entry, and we got out at $4. So up here, our highest exit. So pretty much caught the whole move so far for $3, whole dollar move. Oh. I started with a 100k account. What could I make in 12 months? 7 figures. Percentage-wise, that's pretty much what I did last year. I started with just over 100k, and I had a little over 1.2. So that was last year. It wasn't so easy last year. The year before, I started with 30k, and I made just over $1 million, so go figure. But yeah, I mean, percentage-wise, with a small account, you can make 2, 3, 5% on a daily basis for a while, but then you start to plateau. Then you need to start setting your goals in dollar value as opposed to percentage gain. Your gains just there's economies of scale. It doesn't work trading these low flow, high volatile stocks. Is to get the same gain, if you want to continue to get 5% every time you're growing your account 5% a day every single day, and continue, you're gonna have to get increasingly bigger and bigger size to a point where it's just not feasible for you to do it, because you're taking a huge part of the flow. You've got trading a stock that's like 1.5 million in the flows, and you're looking to get another 5%, and you've got a 7-figure account. It's just not feasible. Well, it's not investing though, is it, Super Chip? It's trading. There's a difference. Investing is more long term, but your day trading is like any job. It's you're looking to make, like science. That's the way I look at it. From setting targets, it's like having been in the tech industry, particularly in the sales and marketing side of the tech industry for over 20 years. It's setting those kind of goals, looking at increasing your goals on a daily basis, to break it down into bite-sized, manageable chunks. So you set your annual goal, you break it down on a monthly or quarterly basis, you break that down into what you should be doing on a daily or even weekly basis. And you do it operational. You've got your run rate business, so what here would be the basics, and then you get the big deal that actually pushes it over the line. No difference here. Well, I did more than 900% return last year. Day trading, you can outperform the market by a long stretch. Investing longer term, it's probably not going to perform as well, but it's less risk. And that's the thing with the different types of trading. If you're a scalper, you're going to have a high success rate, but it's going to be nominal returns. Likewise, if you're a swing trader, you're not going to have as big a returns, but it's overall, but in terms of individual trades, you will. So swing trading is I would say, if you're doing it right, is less risky than actual intraday trading, and the lower, depending on the instruments you choose to trade. Value investing, then that's virtually the safest thing that you can do. You pick a strong stock, strong instruments. Don't even have to be stocks, but you pick strong financial instruments, and you just keep adding and keep adding. If it pulls back, you buy it at a discount. If it continues moving up, you buy more. And that's long-term investing. In the long run, you end up growing. You get that compounding effect, which is like magic, and that's investing. I mean, that's what Warren Buffett does. I mean, it's the safest way of making sure your money outperforms, inflation, and keeps your money's increasing in value, but without the risks of losing it all. They tell you there's risks, but is there really? Markets only ever go in one direction. How are you doing, Brandon? Good for you, Tony. Good earnings there. 20K weekly. I've been targeting last year. I did a little over about 6.5K daily on average across the year. So hey Thomas, welcome to Circus. The momentum's is pulling back at the minute. Looking at the momentum scanner here, and everything's just pulling back at the moment. So waiting for some new momentum upside. I am a long bias trader, so which basically means I like to buy high, sell higher. People say the way to work the stock market: buy low, sell high. You can't. You can. Dip buy traders can do that, but it's a bit more risky. How do you decide when the bottom's in? So some people use an indicator like the exponential moving averages. You're looking for a pullback to a certain exponential moving average, buy it, and then if it breaks below it, you get out very tight risk. But if it bounces on that exponential average, then ride that up for whatever target you've set yourself, a new high, new swing high, or a new high of day, or whatever it is. Different strategies. Different folks have different strategies they like to trade. I'm more of a momentum trader. I like to buy high, sell higher as it starts to break out and move up. Occasionally I do get caught on the pullbacks, and that's okay. Works for me. Do I have any tips for dealing with revenge trading? Yeah, don't do it. There's a simple answer there, Daryl. Every entry trick. Now, I don't. When I'm for statistical purposes, I don't count every entry as a separate trade. Okay, so when you're looking at your statistics, I count if I get into a position and then I get stopped out, or I exit a position and then I get back into the position a little bit later, and I count that as one trade. It's the same sentiment. It's effectively one intraday trade, even though they made multiple entries on that trade. That's what I count from a statistical point of view. However, your question is not about statistics, it's about revenge trading. If you get hit by a stock that it fakes you out and it's a big loss, whatever it is. It doesn't have to be a big loss. It fakes you out and it annoys you. The next entry is a new trade. Mentally speaking, that's how you deal with it. As soon as you're out of a position, that's gone. It's like you're moving averages. It's all lagging indicators. So it's a lagging data. So it's gone. You don't even think about that trade that you've just lost a bit of money on. The next trade is what you need to concentrate on. You can't get it back. That's a fee. That's today's fee from the market. So you look at your next trade. You look for your next good setup. It might be on the same stock. It might be on a different stock. You look for the next good setup, which is why it's not uncommon. You'll see me. It's not uncommon. Like yesterday, for example, I can't remember which one I was trading. My first entry, I made a little bit of profit. I went for another entry, lost. Still green. Went for another entry, was red. Didn't quite get to my sit on my third or fourth entry. Held it into the open. Then, as it pulled back, I got out and I ended up finishing red on that. Doesn't matter. The very next trade, I made that up and then some just by looking for the right entries. So revenge trading is just going to make it worse. You're going to throw good money after bad money. Don't do it. If you feel like it's affected you emotionally and you're making emotional, you need to be able to start recognizing this emotional decisions, then you need to just lock it down, walk away. It could be 5 minutes, it could be 10 minutes. Put yourself on timeout. Be for a whole day. Go and take the dog for a walk. Go and, lift some weights, have a cup of tea, cup of coffee, whatever it is. Just put yourself on timeout. If you're making irrational, emotional decisions and it's costing you money, put yourself on timeout and then come back a little bit later. Come back the next day. So if you get stopped out at Daryl, don't be looking to jump straight back in. Look for the entry. Look for the signs that it is reversing, because it's okay. It's normal to get stopped out. It may just be that you've set your stop too close, in which case, if that's the case, and you're not looking at the various indicators to say, okay, what is the risk I should have been giving on this particular stock, then you might want to look at your next entry for, as it starts to make it curl back up, pulls back and stops you out. As it starts to curl back up, you have to say, okay, well, what's the range on this on the 1 minute? Did I put my stop too close? And if that's the case, what's the spreads? Think of it this way: you've got 10-cent spreads and on a stock that's got a 20-cent ATR on a 1 minute chart, for example. You're going to be risking 30 cents. The realistic risk there is 30 cents on the share. If you want to be risking, 5,000 shares at 30 cents, then you're going to be, you're going to be risking $1,500. Is that right? You don't want to be risking $1,500. Maybe just take 2,000 shares. And then you're risking $600. That's the best way I feel of doing it. Is look at what the risk is, what the range of the movement is, because you're going to get those pullbacks. If you're getting at the top, or you get faked out on a breakout level, at a pivot level, and it pulls back. If you pull back and if you've got a 10-cent spread, you put a stop of 10 cents, spreads are going to get 1 cent pullback and you'll get stopped out. If you put a stop of 15 cents and it's got a 20-cent range and a 10-cent spread, it's going to stop you out. So look at where you're setting the stops. Are you giving it enough breathing space? Are you risking, and also calculate. You need to calculate your sizing accordingly so that you're not risking too much. If you're setting yourself a goal and you're saying, okay, well, the most I need to risk on this particular trade is $150, then you want to be able to make $250 to $300. Is that realistic? Is that something that you're going to be able to achieve based on the movement of the stock? Hey Vas, how you doing? Oh, cheers, 7G. Really appreciate it. catching a falling knife is very dangerous. You know, trying to judge the bottom. If you've got confirmed support levels, it's a little less risky, because then if you're trying to buy the pullback and it's at a confirmed level. So right now here, 350 is a good level for support. Why? Well, you've got the psychological level. Let me just draw this line here. So you've got the psychological level of the $0.50, and you've got confirmed support here, pulled all the way back to 350. Moved up again, pulled all the way back to just above 350. So that's what you've got to understand about support and resistance areas. They're exactly that. They're areas. They're not to the penny. So you've got to look at it as areas. So this 350, pulling all the way back to 350 now. The next time it pulls back to 350, it's okay to take a position there, buy the dip. But then if it drops, you've got to set yourself at very tight risk, because if it goes below that, you might be saying, okay, well, I'm out. So you might risk in 5 cents. If it pulls back and you get on the bid, it's like 355. You buy at 355. The spreads currently are a penny, so you're buying at 355. So you're risking 4 cents on the bid. If the bid goes below 350, then you exit. And that's one way of doing it to have tight risk, but you've got to be very disciplined when you do it. That's the problem with buying the dip, is a lot of the time you don't want to be wrong. Emotionally, you don't want to be wrong. So if you're buying the dip, you've got to be very disciplined in having that tight risk. You're only risking a small amount. It is a very risky strategy. So if you're only risking a small amount, you're mitigating that risk. Buying the dip is probably one of the riskiest strategies, but it can also be one of the most profitable strategies. Even though it's risky, high risk, high reward, because if you time it right and you get it right, you buy that dip and it goes for you, and then it can go on to new highs. You've got pretty much the entire part of that swing move. AYI. This one. Okay, so 15.5 billion float. That's not right. That's not right. 850k, 840k float. So micro float. So Fargo, ND, and Junction City choose BioKey Portal Guard for secure access via biometric authentication. That's why. Higher relative volume on the day already, but very small float. 840k, 40,000 shares in the float. BioKey in. The biggest gap for over $2. This is this a pop and drop? This is the kind of question that I would be asking. You're looking at the dip buying strategy. Where do you buy? Where's the bottom here? Where are you going to set your dip? Because you've got the VWAP was 286. Went below that. It went all the way down to 276. You wait for 9 EMA. Currently at 269, 268. It's not reaching there, so you've got to set your starlight somewhere. Always wait for a pullback. That first move is always unreliable. So you wait for the first move, always wait for the pullback, and then you look for the confirmation. Because particular pre-market, you get a lot of pop and drops, a lot of pump and dumps, pop and drops, whatever you want to call it. the initial pop and then the sell off back to where it started. So you don't want that. You don't want that to get caught in that. Over $3, this might be of interest. Let's get that like count up on the old YouTube there. Let's smash that thumbs up button if you haven't already. Don't forget to subscribe to the channel. You'll get notified every time I'm trading live. Right now. A descending wedge. So see how far this pulls back. So now going up to 9 EMA. So it's the kind of area that you think I want to buy this dip. Trade Coinbase. Why'd you say that, Leo? Because you've been jumping on the bandwagon with Wall Street bets and the rest of the Reddit nonsense. Is that why you're saying trade Coinbase? Yeah, there's no volume on it. I think this is a SPAC merger. A SPAC merger. It's not an IPO. No IPO that I'm aware of. For this today, I think it's a new. And it's one of these new ETFs, but it's one of these new Bitcoin ETFs, Ed. It's the Valkyrie Bitcoin Fund. So this is one of this new. It's first day of trading today because of the spot. It's a Bitcoin spot ETF, a BRRR. That's what that is. Okay, well, good luck with that, Leo. I would much rather try something that's got momentum on it. Coinbase, want to speculate and gamble, I guess. When you say it's gone down so much, from where? Or was it highs there at just the end of last month? Pull back with the market, but Coinbase, no opportunity for Coinbase right now for me. It's 4% up on the day. Why would I want to trade? We're talking $158 a share. It's too expensive. Trade intraday from my point of view. There's much better things for me to be, I believe. More volatility, better volatility, more volume. Okay, well, you trade it there, Leo. Look, I'm trading intraday. If you're looking at swing trading, Coinbase is not a bad opportunity. I think it could be a good opportunity. But for intraday trading, no, not right now. So for someone just starting trading, what would be a fundamental thing to keep in mind? Okay, it's not about profits. This is one of the big things that people get wrong when they get into day trading. Okay, if you're looking at getting into day trading, it's not about profits. It's about protecting your equity. It's about, you know, mitigating risk. If you're going in looking for profits, then you're probably going to get stung. Okay, you don't concentrate on the gains, you concentrate on the losses, or mitigating those losses. So risk management is the #1 factor in profitable day trade. If you manage your risk effectively, you will be profitable. If you don't manage your risk effectively, you will have some big gains and you'll give it all back. That's a common mistake that the majority of traders go through at one stage, usually in their early part of their career, is they'll have some big gains, they'll have some big wins, and then they'll have bigger losses because they don't manage the risk effectively. So if I can give one tip, not advice, I'm not a financial advisor, one tip to any new traders out there that are starting is don't concentrate on the profits, concentrate on managing risk, concentrate on protecting your equity. That's what I would say, Adam. Too many people buy into the marketing BS. You know, you particularly Forex traders. If you're going to be a Forex trader, expect to lose money. It's a mug's game. You'll see all these Forex traders on TikTok and Twitch and YouTube, and they're all in the Dubai penthouses, driving the Lamborghinis, which are rented, and Airbnbs and rented cars, by the way, because they're broke. They're selling you signals and Telegram channels, stuff like that. Majority, I would say, the overwhelming, not just majority, the overwhelming majority of Forex traders bleed money like they've just been cut with a scalpel. Seriously. To be profitable, a very small percentage of Forex traders are profitable. And the majority of those have 7-figure plus accounts. So unless you've got 7 figures and you're managing your risk effectively, don't bother trading Forex. It's a mug's game. Exactly, Adam. Don't be over leveraging your position. First and foremost, that's one thing. And secondly, is take profits as you go. Don't be looking to. If you're getting on a move and you're riding momentum with any particular stock, don't forget to take profits along the way. You'll get to the end of your trade. If you do this, you get to the end of the trade and you'll say, okay, my first entry. So, for example, let's put Spectre here. Okay, Spectre. This is the move I took on Spectre earlier today. If I got in here 301, my first entry here was 301. My last exit was $4. Okay, so that's effectively a whole dollar move. Now I was averaging what, 5,000 share position, between 2.5 and 5,000 share position. Okay, let's just say 2,500 shares. If I just bought in for 2,500 shares and held until it made that whole dollar move, I made 2,500. I didn't. I made 1,425. Why is that? It's because I was sizing in and sizing out, sizing in and sizing out along the way. And you need to be doing that. A number of reasons why is because you're never going to guess when the top is. I did fairly well to get out at the top here, but more often than not, you're not going to get the whole move. But secondly is you're mitigating risk all the time, because if you take profits as it reaches a high, as it then pulls back, you might want to then add back as it starts to curl back up and move back up. But more often than not, you're going to miss some of that move. You're not going to get the full position for the full move. So take profits as you go. Nobody goes broke taking profits. That's what they say, and it's true. You get a nice runner, you'll hit your goals. Otherwise, just about base hits. Don't be swinging for the fences with every single trade. Don't be expecting. Your goal is to make $500 a day. Don't expect to make $500 on your first entry, on your first trade. That $500 a day could be realistic. You might need to take 15 entries across 4 different stocks, averaging like $50 a piece, and then you'll have some losers amongst that as well. So, yeah. You're absolutely right. Staying in a run is difficult getting, which is why I say take profits along the way, and that way, the next time you actually add to that position, you've moved your average cost up. So you take partial position off, take some profits, then you can add that back a little bit later as it starts to curl back up. You move your average cost up, and then you get out for break even if it reverses on you. And it's a profitable trade. But locking in profits is important for a number of reasons. Psychologically, it means that you're actually growing your equity. If it's a margin account, and this is one of the advantages of trading with a margin account. If it's a margin account, it becomes instantly settlable. So you can start trading, you get instant leverage on that as well, so you can start using that trade going forward, even if you're still in a position. So if you take a 1,000 shares of a stock, and then you take 500 off after you've made 10 cents, that 10 cents on that 500, you can use that plus leverage against it as well, which means that if you were max leveraged, you can actually take more shares than you were originally, even at a higher price. It's that's kind of a compounding effect. But taking profits as you go just allows you psychologically to, by moving that average cost up, means you've locked in some profits, but also you're not going to hold it and give it away, give it all back. Morning, Earth and Honey. Yeah, get them. Revenge ads or buying the dip from a position of weakness. Yeah, well, you've seen me. I've been guilty of that as well. I think everybody's guilty of that. And another thing, Adam, is don't berate yourself too much. If you make a mistake, you made a mistake. We all make mistakes. You're going to be wrong at least half the time. If you're married, you'll know what it's like to be wrong. If you're in a relationship, you know what it's like to be wrong. I know I'm wrong. Even when I'm right, I'm wrong, apparently. Waiting there. Patience. Oh, you heard that, did you? Well, the dog's fine. She's, in fact, chow chows are really good for the heat. They're actually native to this kind of climate, so they regulate the heat through the fur. So with that double coat, so it kind of acts like double glazing. It keeps the heat out when it's warm, and it keeps the warmth in when it's cold. Insulation. Just waiting, guys. We've got half an hour until the market opens. Get green, stay green. We've done that. We're not at goal though, so just gotta wait. Again, look, what I was saying here about 350 being a key level, when it finally did come down to 350, you've got to understand here is pull back. The 9's already crossed the 20 and the VWAP. 20's crossed the VWAP as well. So it's looking very bearish right now as it breaks that 350. So that's not a position you'd want to be taking a dip trade there. Here, possibly. You're coming down towards that 350 area, but the 9's above the 20, the 20's above the VWAP, and you know it pulls down, so you've still got a very tight risk there. Here, it's looking weaker. There, it's still looking fairly strong. So. With the smaller size, what's my daily goal? I've not actually set myself a daily goal there, getting, but I've not got smaller size anymore. I mean, starting today with just under 44k in the account. So I was looking for a 2% gain on Monday. I thought, okay. $200, that'll be fine. I'll start off, keep it, and I got 4K on Monday. So I did a 40% growth on the account on Monday. And then on Tuesday, I did 150% growth. What figure? 140% growth after fees and charges. So it's just this week. It's set up well. Had a nice 10k day yesterday, which was a good day. So I've had 35-36k already this week in 3 days off a 10k start. I'm feeling more chilled there, Alistair, to be fair. Yeah, 36,799 is the gross profits this week, this month, this week, this year. Largest gain was that NYSE trade there on Tuesday for 14,805. That was just easy money. Yesterday, a couple of easy trades as well. Just set the trailing stops in place, into volatility halts to the upside, and the trailing stops were just, it was like printing money. It was lovely yesterday. Very nice. I don't like the new, to get used to it. I don't like the new GUI on TraderView. I'll have to get. So far this year, my biggest gain, I've made 22k between 9:30 at the bell paper, 9:30 and 9:45. That's interesting this year, just by being a bit more relaxed. Kind of be expected. That's where the volatility. Absolutely, Matty. Actually, I'm 33k profit. Excuse me. Oh. Yeah, I probably will get him. I probably will. I'll probably do it. I'll probably do that for the first 3 months. See what happens. I'll reset in at the beginning of February and start with 10k again. Walk with me. Thank you very much. Minimum amount to start stock trading. I wouldn't do it with less than 5k if I was you. Well, best and trusted broker, that's subjective. I'd say one of the most trusted brokers is going to be Interactive. They're a global operation. Interactive brokers are a global operation. and you pretty much get accounts with them everywhere. But depending on where you are, you're going to have issues with the pattern day trading rule. I would say that the minimum for day trading, anything less than 5k, if you're not an experienced trader, anything less than 5k is going to be very difficult for you to make any money. Even with 5k, it's not about the profits, it's about protecting that and incremental gains. Trade small. If you're in the UK, then I'd suggest Capital Markets Elite Group, CMEG, because that way you've got no PDT rule. The speed trade is also reasonable, but I think you need a higher deposit level. With a smaller account, CMEG's a good broker there in the UK. You don't have to, and if you're wondering what the PDT rule, pattern day trading rule, it basically limits how much you can trade for in any given week, any given five trading day period. If you've not got a $25,000 equity position, and if the broker implements the PDT rule, which most US brokers do, then you'll get 3 trades before you actually then restrict it. So the best thing to do if you don't have $25,000 to open an account with a broker is to look for an offshore broker that does not not subject to CC regulation and will not implement those PDT rules. So Speed Trader, CMEG, brokers like that are what I suggest that you'll look at. If you're outside of the UK and or Germany, Interactive Brokers, regulated out of Cyprus, will also not implement the PDT rules. If you're in Ireland, if you're in the Netherlands or France or Spain, Interactive Brokers will be okay for you in regards to no PDT restriction. I was actually thinking about that, getting for diving and fishing and stuff. Actually, I was thinking about that very thing just last week. I'll take a look at Roma, recent IPO this week, and no volume at the moment. On the 50, so it had a decent day yesterday. Which it needed to because it sold off on Tuesday. I got in here, the initial pop, I made 3k on this on Tuesday, but then it sold off pretty much the rest of the day. This went up to $11 on Tuesday, $12 or something, and then all the way down to $2. But from $2, big day yesterday, from $2 up to over five and a half. So it's just sideways chopping at the moment. Not great volume, just sideways choppy. Not great range. Less than 4 cents on the on 1 minute ATR. So right now, no trades for me on Roma. No intraday trades right now, but it is a recent IPO that's still worth keeping an eye on. IPOs can be volatile for a week, 2 weeks after the initial IPO. Once the IPO closes, sometimes you get a little bit more volatility, so they can be worth keeping an eye on. Not necessarily trading, but just keeping on the watch list for if they do get some volatility. Well, it's $10,000 with my strategy. How much can you make monthly? How long's a piece of string? I can see the question could be how much could you lose monthly as well. So look, my results are not typical results. I do outperform the market, and I lost money to start off with. Unless you're an experienced trader, don't expect to make big gains. Can I make 100k off 10k in a month? Yes. Can you do it? Probably not. So, and that's no disrespect to you as an individual, but if you're asking questions like that, it tells me that you're relatively new to the market and your objective should be to not to make money with 10K. It should be to keep 10K, keep your account above 10K. The way I talk about learning to trade and learning to day trade is it's like learning to swim. First thing you've got to do is stay afloat. If you can tread water and stay afloat, you don't have to worry about swimming lengths. You certainly don't have to worry about competing with other swimmers. Just stay afloat. If you can stay afloat, cover the cost of your trading, i.e. commissions and your actual, the cost of trading, so the likes of your scanners, whatever expenses that are being incurred, then that's a win. Over time, you'll get better at it. And over time, you'll start to get consistent. And that's the big thing, is consistency. And you start making small incremental gains. Over time, those incremental gains grow your account. And then your account, you start to make bigger gains. And then you can start to look for making decent amount. What I would suggest is, your day trading, don't be risking more than 2% on a daily on any one trade. 2 to 3% is you're risking too much. Depends on your appetite for risk. Don't do what I do. Do as I say, because I have a bigger appetite for. I'm a lot more aggressive than I recommend anybody be when it comes to trading. But it works for me. So yeah, $10,000 with my strategy, you can earn over the course of a year. You can earn a lot of money once you get comfortable with it. But also, you can lose $10,000. So if I need to caveat that as well, put that out there. If you're going to be aggressive like I am, the likelihood is, without the experience and the knowledge, you're going to lose that $10,000. The fact of the matter is, you're going to lose money in the first 6, 12, or even 18 months that you're trading. So don't put money into an account that you can't afford to lose. You're going to lose money. Everybody does. It's the persistence and the consistency that matter. So if you can be persistent until you are consistent, then you can get to a level where you can start to make money. It's what's known as a tuition fee, the market tuition fee. It can be a very rewarding, high-paid profession, but it's not easy, and it does take time to learn. Christmas was okay, Chris? Huh? I don't understand what you're saying, Lukalalian. I don't know if you've got a spell mistake in auto-correct in there, but they said to you that they want a monthly deposit. I'm not sure. They're asking you to deposit monthly. Is that what you're saying to me? Kadak, we're not interested in your dodgy TV scams. Don't spam someone else's channel. Right, okay. Why would they do that? I honestly don't. Morning, Rob. I don't know why they would want a monthly deposit. If you're making money, why would they want you to deposit more? That doesn't make sense. I'm missing something there, Ukulele. If you're making money, you're covering the cost of your fees and charges and commissions and your scanners and everything else. Then why would you have to keep adding more to your account? That doesn't make sense. If you're on a small account, if you've got less than $500, that's entirely up to you, Brandon. Depends on your risk. What are you risking? The actual price of the stock isn't, for me, the price of the stock is not the issue. It's the volatility of the stock. So what is the spread? Like, so it might be a $20 stock with a penny spread, and it's only got a 10-cent range. In which case, it's going to cost you more to buy 1,000 shares than it is on a $3 stock. But that $3 stock might have a 10-cent spread and a 30-cent range. In which case, the $3 stock has got better potential than the $20 stock does. So you can take smaller size than you will on the $20 stock, on the $3 stock than the $20 stock, and make more money. So it's all subjective, Brandon. Look at the risk on the stock. Look at the volatility of the stock rather than the actual price of the stock, and that will give you an idea of what you should be looking to in terms of sizing, what you should be looking to risk, and what you should be looking to gain. Spread, volume, range, momentum. If you've got a $20 stock that's moved 50 cents over an hour and it's got a range of 5 cents on the 1 minute chart and it's been a penny spread, there's not much opportunity there. There's not much volatility there. If you've got a $5 stock that was a $3 stock just 10 minutes ago, it's moved $2 in 10 minutes, then you know that is a highly volatile stock. It might have a big spread, but it's got it's $2 in 10 minutes. So the range is huge and the opportunity is huge. You look at the volatility and the volume. Spreads are part of the risk that you've got to factor in. The range is part of the risk that you've got to factor in. But volatility and volume are the two key ingredients for selecting stocks to trade. Morning, Invest Addict. Good to see you. Which stock am I in right now? Antares. I'm not in one right now. I'm waiting. We're going through a period of consolidation on the market right now, so I'm just waiting for something to rear its ugly head and give me an opportunity. I'm not in anything right now. I'm currently looking at Roma. That's not something I'm interested in. NYI. Previous time of trading this. This was a reverse stock split last month. Up to over $4. What else? Constellation acquisition. No, absolutely not. Volume forward that one. EBT, no range on it. Lack of volatility. When you're talking about 2 cents on the ATR, talking 3 cents on the spreads. No, almost barcoding. Nothing there to be. Bit brother from yesterday was stock split yesterday. Didn't really do much. I thought we might see a bit more out of Bit Brother yesterday, but no. Sideways, $7. Day trading should be one component of your investment portfolio. you won't get him. The way I look at it, and the way I say it is day trading is like your day job, and then you want long-term investment to hold those gains, safer investment. So if you are day trading, probably the highest risk, then you want to take that your gains from day trading, assuming that you're making consistent profit from day trading. Take your gains, split it into three. Third is your cost of living. That's what you can spend your money on. Buy your little luxuries and cost of living. And the third, just keep it in behind because the taxman's going to want his cut. And then a third you use for your longer term investing. Longer term investing, I'm holding cash position with Interactive, which I use for swing trading. Usually I do option trading when I'm swing trading. But also your long-term portfolio. Your long-term portfolio is for your, retirement stroke, later years in life. You want to have a comfortable living as you get later in life, and you want to build up a nice little portfolio of stocks, ETFs, bonds, whatever it is that you want to be doing, even property, real estate, and that's longer term investing. You're not going to get the same level of gains. You're not going to get the same percentage gains or the potential of percentage gains, but it's a lot safer. You're not going to get the same losses either, potential losses. So it's safe. It's going to outperform if you do it right. It's going to outperform any kind of inflation. So you're not going to lose any money that you've got in terms of just it sitting there and depreciating. You're going to get compounding effect as well, which is always good. So yeah, I agree that you should have multiple strings to your bow when it comes to your money. Have multiple streams of income. Have a long-term portfolio. Don't just have your day, because if all you're doing is day trading, then what happens if you're in hospital, heaven forbid, and you're taken ill? You're not earning any money. So have investments that are going to earn money passively for you as well. There's Alistair, which is a good one. Any advice how to hold winners longer? First and foremost, take some profits. Have your initial target, take some profits at that target. If it then pulls back, you can get out, break even, and it's a profitable trade. Okay, with partial positions. The other part of that is having trailing stops. Once you get to a position and it's moving up and you're in there, rather than panicking and getting out of the position for a profit, put a trailing stop in place. If you're up 20 cents on the share, put a 20-cent trailing stop in place. Worst case scenario is I'll take half your position off and put a 20-cent trailing stop in place. Worst case scenario is that second half of the position, it pulls back and you get stopped out for break even. Best case scenario is it decides to go parabolic like we saw yesterday, and it continues to move up with the stop in place. Then eventually when it starts to get extended and pulls back, it stops you out and you made a nice little profit. Trailing stops are magic like that. I wouldn't trade options long term, Brandon. Me personally, long term options for me are not investment. They're a trading instrument, but not an investment. Because unless you're planning on exercising those options, you may as well just buy the underlying stock. What options will allow you to do is get higher leverage. Be careful with your ETF. Buy and hold. When it comes to ETFs and buying and holding with ETFs, it's not a good strategy to do that because the price goes up and down, okay? Depending on what it's linked with. If you're going to be investing in ETF, this is just my opinion, not financial advice. I'm not a financial advisor, so don't sue me. This is my opinion. You need to be investing in, you need to select your ETFs wisely. You need to be investing in them regularly. You need to be lump sum investing. So when you, at the end of each month, whenever you've got a little bit of spare cash flow, you buy more. So that way, For example, if you get a leveraged ETF, like a TQQQ, for example, that's going to be that could end up losing your initial investment. So what if it pulls back? You get a bear market scenario, and you get 12 months of retracement. What you want to be doing in that 12 months of retracement is buying more. You're averaging down. That's the averaging down is a great strategy for value investing, providing you're investing in good instruments, strong instruments. So index-linked ETFs, you're averaging on a regular basis, on a monthly basis, on a quarterly basis, or whatever it is. But you're not just buying now and then hold it, because if it then starts to pull back, you're going to panic. You end up selling it at a loss or whatever. Or you may end up waiting for it to then gain and reach those all-time highs. Not far off all-time highs on the SPY, for example. Let's go back to the SPY right now. We've got 2 minutes before the market opens. So this is the S&P 500, the SPY. Look at this on the daily chart. You can see here all-time highs right here. This dotted line, 479.36. We're at 477.43. So the last time we were up here at these all-time highs was 2 years ago. So if you bought up here, if you bought this ETF and held 2 years ago, you'd have been panicking when we had the bear market in October 2022. When we're at the bottom of that, you'd be thinking, I've lost all that money. Whereas, no, you should be averaging and adding to it every month. Add to it, add more, buying at a discount. Now you're up here at 4.7, almost at these all-time highs. You've made an absolute fortune by just adding more every month. So that's your long-term portfolio. If you're looking at any kind of long-term investment, you need ongoing adds, like that monthly gain, monthly addition is what you should be looking for, something to add to it. Not quite dollar cost averaging, it's lump sum averaging is what. I've got a number of accounts with Interactive. So I've got a SIP, which is via Aviva, which is which I manage through Interactive Brokers. I've got a cash account. I've got a margin account. I've got another account with ISA that I don't use, but with Interactive. Yeah, we've traded Antares. We've traded Spectre Holdings earlier. So when this moved up, so we got in at $3 and got out at $4. So we got a whole dollar move on Spec there earlier, but it's pulling back. It's sideways, getting an inverted head and shoulders there. So we might get something. I'll just change the scanners over. Too busy talking. Good luck, guys. Spec back over the VWAP could be of interest. 350 is an interesting area. Well, Ed, I mean, 11%. If you stick your money in the in the S&P 500, the SPY, you've got to be getting pretty much 11% annually. Historically, that's what it's done. Well, between 10 and 12%. Bye-bye. Bye later. Tempted to get in there for if it got over the VWAP, but hold. So we'll see. Be patient now, guys. Come on, guys, whilst we're waiting for something to break out and give us an opportunity, let's hit that thumbs up button. We need 12 more likes. And a lot of you have not hit it. So Roma was IPO on Tuesday and had a good day yesterday. Pop out of the blocks. Happy New Year to you, Sparley. GlaxoSmithKline, is it a sell? Well, that's up to you. It's all subjective. What are you hoping to do and how long are you looking to hold? Or if you're looking at shorting it, that's what you're saying. Market, Glaxo tends to move with the market. Yeah. Market is still moving up. So the question is the market going to... P500, get that spike when the CPI data came out, bit of a drop. Too busy talking, I didn't even excuse me. Yeah, so CPI numbers 3.9 versus a 3.8 estimate, so it's a bit higher. That's year over year. Month over month is 0.3 versus 0.2 an hour ago. So we did get that drop, but I think we'll get a bounce. We are getting a bounce. All right, as well. CPI numbers not best. Roma, recent IPO. Right at $5. $5. $5 on the S. $5.11 is the halt level. Back here. Last 5. Go. 21, the halt level now. Off. $5.27 side. $25. 30. Stock type. Hello, 520. Five, 7. Went up to $12 on Tuesday, but too much. Stop, my man. Stop right now. Head for the thing else moving. Not really. Volume. So bionic. Breaking highs. Nice. At the moment. Cool. Yeah. Green on the day, Onyx. Heads, even. Volume, not enough volume. Very happy day yesterday. And I don't like all of that. I've said. Oh. How are you guys getting on? Let's get another 5 likes. Let's get over that that 50 like threshold. Hit the thumbs up button. If you've not hit the thumbs up button yet, just give it a quick smash. Really appreciate that. It just helps me out with the YouTube algorithm. Hi. Where's Brandon? Wait. Or, hang on. Right. Okay. Okay. Brandon, by the way. 40 cents at the market every day. A lot of money, dude. I well, dip. Oh, my new IPO. Sterling. Current high today. High of day. New pod. Stop. 30 seconds. Alt level at the hot 88 is the level. 60 on this one. 597 is now the halt level. Again, sometimes it's trial and error when it starts to move up like that. It's rangy on the spreads. Volatility quite high. I was going in with like started off 10-cent trailing stop, stop take. 20-cent trailing stop, stop take. I've now got 30 cents. See what this one gives us. 2,500 stands. Or is entry here to add. Now. Seven. Yeah, 10. I don't like to set targets walk with me where it's going to finish. I'll add the momentum. Projected at $6. So Roma would almost been on Roma. One is little while. That's $6. $6. Busted up there. On it. It's not an easy day's trading today, guys. Today. Green, not at gold, but we're green, and that's all that matters, guys. How are you getting on? How are you guys getting on? Are you profitable today? Are you finding it difficult? Copy. There's no real big moves. Roma's probably the best one at the moment. Anyone else hit the goals yet? Other than Brandon. Well done. Shout out to Brandon again for hitting today's goal. Anyone else hit today's goal? And 25 cents is not bad all day. You in a cash account or are you Vols would have been good with this one. It's the 9 EMA. Pretty. Yeah, the dips to the 9 have been consistent. This one, so Vols. Don't know where you are, buddy, but strategy would have been paying off. Extended for me right now. Yeah, no, that's no problem with that all day. Wise thing to do is just get the consistency. Except for the volatility, Josh. Yeah, there's a bit of movement on the No worries, Ed. No worries. No, David, you can't start with $1. What stock are you going to buy for $1? Seriously, yes, you can options. If somebody tells you that you can start profitable trading for $1, they're trying to sell you something. They're trying to sell you access to a Telegram or WhatsApp channel. The scammers, basically. You're not going to start trading for less than $5 grand. Don't care what anybody says. If you've got a bit of pocket money, you're going to start trading. Try and start trading options for $50 or $100. Just send your money to me. I'll make better use of it because you're going to lose it. That's it. It's that simple. You're not going to make any money if you're going to start trading with $1 or $50 or $100 or even $1,000. Less than $5,000. Just take your money and buy yourself. Pay for a mentor and get some good education on how to trade. Anything less than $1,000, you're just going to lose it. Minimum I recommend for day trading is 5,000. Options or equities, it doesn't matter. 5,000 is the minimum I would say. But if somebody says that you can start with $1, it's because it's the old cocaine dealer mentality. First hit's free. Hey, you know, first hit's free. You come in, join our Telegram channel. First hit's free. You make some money on your first $1. If you don't, guess what? You're not going to give them another $1. But if you do, you're going to give them $10, and then you're going to give them $20 or whatever. And they don't care about if you lose money because it doesn't matter to them. What they care about is if you make money, they can get it off you. All after your money. So don't any of these YouTube and TikTok scams that say join our. If it's got Telegram or WhatsApp channel, it's a scam. That's all I'm saying on that subject. It's, if they say WhatsApp or Telegram, it's a scam. Ah, Alistair. It's been a choppy day today, to be fair. A larger account, you can trade better. You're better off all day is learning to trade on a small account because of those restrictions. It forces you to be more discerning with your trade selection. So if you have a small account, yes, you're going to burn through your trades. You're going to burn through your buying power a lot quicker. Your commissions are going to eat into your profits, so you have to be selective with your trades. So learn to trade with a small account. Then when you go with a larger account, easier to make money. It's easier to make money with money. That's without a shadow of a doubt. You can take a $10,000 account and make $100 a day very easily. You're not going to take a $500 account and make $100 a day easily. You're just not. So, yeah, learn to trade and learn. And it's about your consistency. Trade selection is part of that risk management piece as well. So it's about just being selective with your trade selection. $800 account. Back in a couple of years ago, it was possible because the brokers were giving you leverage over $3. They were giving you free commissions. It was a lot easier, and the market, you could pretty much buy anything, and it was moving up. So it was the bull market 2020, 2021. Bull market was a lot easier to grow a small account. Now it's a lot choppier. The conditions have changed. The brokers are managing the risk a lot more, so that they're actually not giving leverage on. They're being more selective on what they give you leverage with. Some brokers won't give you leverage below $5. And even then, they'll be selective on which stocks they give you leverage with. Yeah, so. Seen, I think Ross did a $500 challenge and grew it to over $1 million or whatever over the course of a couple of years. But that's some going. The 5K challenge and got over 100K in a month, and then gave 30K back, but still, top was. Okay. Watching back up. It's going to be halted. No, it's still going. Yeah, now it's $6.49 resumption. I'll come back and look at that in 5 minutes. Not seeing really good setups. That's almost probably had the best setups. It's that curl. $0.75. The back over the 575. Back over the 9 cents. $6 would have been a safe entry. 5 cents plus whatever this cap is. Well, I think he's right. I mean, he profits. His profitability is consistency and profitability. If you're consistently profitable, then you're a good trader. Not everybody can trade like he can. That's the difference. I think, like I say, don't do as I say. Do as I say, not as I do. Because if you're trying to copy somebody's style, then the likelihood is you're gonna come a cropper. You're gonna lose money. If you're trying to copy somebody's trade, you're definitely going to lose money. You need to take what you learn off somebody. Having a mentor does help, but you take what you learn off somebody and adapt it to your own comfortability, your own style, your own strategy, something that you're comfortable with. If you just copy somebody verbatim with what they do and how they do it, you're not going to understand why they're doing it and how they're doing it. So you end up losing money. So that's my 2 pence worth on that. But is Ross a decent trader? Yeah, I would say he's a very good trader. He's very profitable. I think what he does have is good risk management, but and a huge account in behind. More of a scalper than I am. To be fair, he doesn't hold. I hold a lot longer than he. Because I'm looking for. I'm a little bit more patient. Looking for a bigger part of the move. Anything else moving? Keyhole power, like the volume profile. And there's nothing wrong with that, Robin. If that's part of your strategy, great, and it works for you. Hey, look, we've all done that. Well, we've not all done that, but I mean, it hurts when that happens. I mean, I think one of my biggest live sessions was when I lost big at the beginning of last year at the Federal Republic Bank, shorting Federal Republic Bank, about 60k down, and ended up coming back and having a really good day, like a 50k day profit. So swings. This thing about max loss is great if you don't have the discipline to get to it, but also if you lose 50k, it's a volatility. So the likelihood is that you can make 50k, and if you've got a larger account to take that, absorb that, you need a larger account. Money makes money. Should get a resumption here. It's 52. Looks like a 25 cent, 27 cent gap up. Get a resumption in 15 seconds. Top didn't make much on that. 2 cents. Pays for the trade. That's a very valid point, Robin. It's if you have a big loss, just take a bit of a time out. Like I say, go and get yourself a coffee, cup of tea, whatever it is, watch your boat, come back and then go again. I think one of the best traders that I've spoke to is that resilience to take a hit on the chin and then not let it phase them, just go again. It's hard to do sometimes. I mean, you've seen me. I mean, the emotional roller coaster that you have with it, just try and keep your emotions in check is a big part of that. If you have a big loss, but you feel like it's a good day to trade, a lot of volatility, a lot of movers, a lot of opportunities, then put the loss behind you and move on to the next trade. Oh, try to. Sometimes it gets to you, but more often than not, it's about, like I said, that mentality of just look, that's gone, can't do anything about it. Next opportunity, next trade. There's always another trade. There's always another stock. There's always another day. And having that mentality, and a good thing from my point of view is I'm not starting out. If you're a new trader starting out, emotions are going to play a bigger portion. If you're consistently profitable and you've made a reasonable sizable amount of money, you can have the mentality of, look, I'm playing with the house's money anyway. I'm playing with the market's money anyway. It doesn't owe me anything. So if I blew up my account, I'm still profitable. That kind of mentality helps me. You have to get to that level before you can have that mentality. You're gonna have a bit of a vicious circle there. Not seeing anything moving, guys. Come on, guys, if you're watching and you've not hit the thumbs up button, shame on you. Just smash that thumbs up button. Remember to subscribe to the channel and hit the notification bell. That way you get notified every time I'm going live, which is every day, every trading day. Also remember that it's a long weekend this weekend. Monday is Martin Luther King Day, so the markets are closed on Monday. So there's no trading on Monday. Tomorrow is the last trading day of the week. Friday, obviously. Take the obvious, Tony. But Monday is a federal holiday. So there'll be no trading on Monday. I don't think I'm too badly. Today's a bit difficult today. I've not green, and that's the important thing. So a small green day is okay. I mean, I've grown the account over 40k in equity from a 10k start this week. Is some going, so having a small green day is fine. I'm okay with that. Anybody likes these lower price stocks? There's something popping up on the radar? No, there's no volume. Big movie yesterday for us was Sana Biotech. To $9 yesterday, from $5 to $9, and we caught a large portion of the move. Got $2 out of it. Prognostics. Don't like volume profiles on it though. Let's see. So, more volume. Well, that's all. Biotech. Intuitive Genes. off hard at the open. Back still. Get the bounce on the whole block. It's it's just one of those patient day. You know, give you patience. You've got to be patient. I think. Might see some more movements. There's an IPO scheduled for today. Not priced. If Douglas Holmes, not priced yet, but should go live probably in the next hour. SDHC, worth watching. I've only made $120 on better than it. if it versus. It's just one of those copy, easy day to trade. So a lot of copy trouble. Volume. It's okay having moving like 50%, but you need volume. Volume. Volatility. Volume. Today's going to be one of those days. Rangy, just be careful with quite rangy. That green on it. Sterling stop there for now. No, is it going for you there, Alistair? Okay, days, better chance, I guess. Just one of those happy days. We'll get see this come back S6 and move back up, because then we've got a holder head holder go back up. Head and shoulders. That could be very interesting. Neckline. Strong neckline. 46. Both sides. So that's your neck. So I would say up to the $0.50. back to $6. Back up. It's inverse head and shoulders. Get that. Okay. That's just my opinion. That's not a prediction or advice. And if you get in at 650 and it reverses and you lose money, don't sue me. That guy on the internet, opinion. Time are we on? We've got to stick to the top of the hour, guys. What do you reckon? Keep going to the top of the hour or lock it in now? Friday. Fees and charges, there'll be a little over $1,000 in profit there today. Better than the kick in the teeth. Okay, I'm on. Over $1 million. $1,000 a day. Over $1 million. Volume. Inconsistent volume. Banzai. Banzai International. Anything worth taking a look at? Mara's not looking healthy. Right earlier. Right at the op. Pretty much got out at the top. Top. Balancing. Okay. Well, this is turning around, looking for this inverse head and shoulders pattern to. There's a shoulder, there's a head, there's a shoulder. Will work. 82% successful head and shoulder patterns. Not a single pattern out there that's 100%. Is a little bit of $250,000. Well, I think I'm going to knock it on the head, guys. Knocking a small green day, rather than trying to force the market to do my bidding. End of the day, any green is good green. Remember, I'm going to lock it up here. I'll be in the Discord for another half an hour or so. So if you're a Day Trade with Tony member, either membership here or student, join me in the Discord. In the meantime, I'll be back at it 8 o'clock tomorrow, as I am every day, and it's the last trading day of the week. It's been a nice green week. Actually, let's have a look at where we are on the week, on the year, on the month, whatever you want to call it. Okay, so the link tree, by the way, is pinned in the chat. This is the link tree. You can find it also in my profile on TikTok. If you want to reach out to me directly, email me. I've got all my email, my socials, Twitter, Facebook, Instagram, all this kind of stuff. By all means, reach out to me. Christmas is over. That doesn't mean that you can't go out and buy Day Trade with Tony merchandise for yourself for winter. January's winter, not here in the Philippines, obviously. But we've got some lovely merchandise for you. Got some fantastic Just a Fat Guy on the Internet hoodies, coffee cups, mugs, hats, whatever you want to get. If you're in the tropics, t-shirts and vests and stuff, bikinis, whatever, wife beaters, mouse mats, whatever you want. Day Trade with Tony, I Trade with Tony merchandise. Check that out. If you want to learn how to trade, by all means, come join the Day Trade with Tony community. You get access to me as a mentor. You get access to all the education material, which includes my e-library, my day trading e-library, which is what I use to learn how to trade. Here's a full syllabus: introduction to trading, risk management, probably the most important lesson about risk management, stock selection, setting up your charts, chart patterns, trading strategies, stock scanning. I use Benzinga. I'll come to that in a second. Trade management and the psychology of trading. Get a bit more technical with level 2 hotkeys, etc. Trading as a business, advanced technical indicators, reversal trading, that kind of stuff. So RSI, MACD, Bollinger Bands, that kind of stuff. Options trading, introduction to options trading as well. As I say, my entire ebook reading material. So that's $120 a month. It's next to nothing, or $300 for a quarter. You also get access to the Day Trade with Tony Discord. Please don't just sign up, get access to everything, and then 3 months later issue a chargeback against your credit card, because that's actually being a shit. That just happened to me recently. One guy did that and didn't even speak to me. If you're not happy with, if you sign up and you're not happy, just let me know within 14 days and I'll give you a full refund. Don't be none of this chargeback nonsense 3 months after you've actually completed the course, because that's just shady. But yeah, okay. TradeReview report. So what is TradeReview? TradeReview is the journal that I use to log all my trades. So as you can see here right now, look at on my calendar. Week point of view, my first day's trading was Monday. Start with 10k, so not far off 50% gain. Then I started Tuesday with 14k, so did a 21k gain, so that's 150% gain. Another big day yesterday, so that's a good week so far. Not so good today, but any green's good green. I'm still green on the day, so $2,000 gross. Current profits, gross profits for this week, this month, this year is just under 37k, so we're not doing too bad at all. What's particularly good this week, it won't last. I know what my average is for across the board, is I've got a almost 80% accuracy in terms of trade selection. That doesn't last. That will not last. I'm about 66%. I'm about two in three of trade accuracy. 2-to-1 trade accuracy. K ratio is really good. Look at this performance, for example, up until now. Look at it in 15 minutes. You can see where the money's being made. It's at the bell. You're watching me do it, so it's most of it's been made at the bell. 9:30 to 9:45. That's where trade distribution as well at that level. So yeah, not a bad start to the year. Not a bad start to the week. We'll, and I did mention there Benzinga. So Benzinga, check out Benzinga. Free, 14 days. I'm not sure if that 65% is still valid. I'll double check that. But try it anyway. If it is, great. If not, what is Benzinga? Well, this is Benzinga. This is how I've got my Benzinga set up. I've got my gap scanner, my surge scanner, and my momentum scanner. I've got my signals here. I've got my falling news ticker here. So this is Benzinga. Go check it out. Free for 14 days. You don't need a credit card number or anything like that. Just an email address. You don't even need a mobile phone to activate email address for sure. So is day trading profitable long term if you are a long-term profitable trader? So yes, you can be profitable long term. I'm consistently profitable, but what I'll do is I'll come back. I'll just switch this back. Here. Back to chart, and I'll come back to the chat now. So is day trading profitable long term? Yes, you can make money trading without leverage. It depends on the size of your account, and it depends on your expectations. If you've got a small cash account, let's say $5,000, and you looking to make 1 or 2%, then yes, it can be done, but it's a lot more difficult without leverage. If you've got a larger account, 30, 50K plus, then you don't necessarily need leverage to grow that account. It's going to take longer to grow your account without leverage. Having a margin account, leverage is not the biggest benefit. The biggest benefit of having a margin, trading in a leveraged margin account, is the instant settlement. So if you're trading in a cash account without leverage, then basically you've got the T+2 settlement rule. You run out of buying power very, very quickly, and then you have to wait 2 days before you can start trading again. Or you can just trade half your equity today, half your equity tomorrow, and then just keep doing that and rotating that. But the biggest advantage I see, well, there's two big advantages of trading in a margin account. One is the instant settlement, and the other is the instant credit facility. So if you want to short, you can borrow shares, and your broker will lend you shares to short. You can't short on a cash account because you need a credit facility. So yes, day trading is not profitable long term if you're not a long-term profitable trader. It is if you're a consistently profitable trader long term. It depends on you as an individual. And can you make money trading stocks without leverage? Yes, you can. Okay, right. I think I'm done for the day. So I'll be in the Discord for the next while. In the meantime, guys, come back tomorrow, 8 o'clock. We'll do it all over again. Take it easy.